Welcome to a special edition of Trade Links brought to you by NatWest. My name is Tim Phillips. Now, it was less than a year ago when I introduced our very first episode like this. Our heads are spinning. The global trading system is changing. Never has it been more relevant to say, this is all true at the time of recording. In the last few months, Scott and Aastha have been explaining to me and to you what has just happened in geopolitics and trade. But today we are doing something different. It's that time of year when we look ahead to 2026. So welcome back to our regular panelists. Hello, Aastha Gupta, European economist, economics and market strategy, NatWest Markets.
Hi, Tim.
And hello to Scott Livingstone, international advisor for the NatWest Group.
Hello, Tim.
And welcome to our special guest, Ross Walker, Chief UK Economist and Co-Head of Global Economics at NatWest Markets.
Hello, Tim.
Ross, true to say that you are the boss for Aastha and Scott?
Well, I am for Aastha, but if Scott wants to be one of my direct reports, I'm always open to expanding my empire.
Do you want more direct reports?
Oh, yeah.
We'll see what we can fix up. So today, we are asking, what's next in 2026? Scott, when I asked you what's coming next in 2026, your first reply was reorientation. So what's being reoriented and around what?
Well, Tim, I'm still convinced this will be a main theme for next year. And the answer to your questions is the what is, well, really anything that generates a national interest dependency for states around the globe, really. Anything to do with security or health or infrastructure, including tech and data in that last one. But really, the thing that's been reorientated will be one of those components of national interest. And then around what? Well, around reliability, Tim. The geopolitics is fragmenting. That's a trend that's been happening for some time. And it has been for a number of years as American hegemony ends and global governance dilutes and a multipolar world emerges. And it has been accelerated with a visceral shock by Trump's administration. But it has been happening for a while. For some countries, fragmentation is empowering and rich with opportunities. But for others, it's front-loaded with risk. And the reliability of supply chains in a globalized system, we got it first with PPE and vaccines during the pandemic, and then Russian hydrocarbons after the Ukraine invasion, and now US leverage after Liberation Day and a belligerent unilateralism from Washington. So countries are responding to this with two natural responses, Tim. The first one is sovereign production and capabilities. And the second one is reorientate relations around reliability and resilience as much or as more than the bottom line.
There were two other R's from you. I could see you put thought into this: rearming and reckoning. Now, these sound like some really quite scary ways of reorienting. What do we have to look forward to in 2026 in these dimensions?
So the rearming one is, I'm on fairly safe ground here because the rearming has already started. 9.5% increase in defence spending around the globe in 2025. And I reckon we'll see the same, if not more again, in the coming year as states realise that they have to find a different way of giving guarantees about their defence and security in this fragmenting world. So I think that's going to happen without doubt. And then the reckoning piece, Tim, is my point that many of the geopolitical trends that we'll see next year will be long endurance issues to do with sustainability of the defense of Ukraine, for example, or the pursuit of a political solution for Palestine. These are very long and expensive geopolitical dynamics. However, in amongst them, I think there will be points of reckoning. And I draw out three, really, that will be sprinkled over 2026. I think there will be reckonings around Europe, around the power of populist politicians and political movements in Europe. I think we will see that. There's a vote in Hungary, for example, next year. There may well be an election in France, depending on how long this French government lasts for. But we will see moments of reckoning, I think, around nationalist politics in Europe. The second one is around the importance of the Knesset election in Israel next year, where I think we will get a sense of a reckoning in terms of how the security of Israel is defined and how it's pursued in the future. And that will have ramifications for the wider Middle East. And then the third one I would would propose, Tim, is I think we are heading towards a reckoning in the US domestic politics around the Constitution, around the separation of powers, the executive and the judiciary and the Congress, for example. And I think we can see the moments that will be in the diary, whether it's a Supreme Court decision or the midterms. To a certain extent, that reckoning, I think, is already becoming visible. I think that's what people will be voting on next year in the US.
Aastha, we started with saying what just happened, and all year the two of you have done a great job at separating the signal from the noise. So, what signal are you identifying for us for 2026? What are the structural shifts in world trade?
Trade in 2025 has really felt like everything, everywhere, all at once. But if we look past all the noise, there are clear signals shaping global trade as we head into 2026. The first one for me would be how geopolitics is acting as a structural force. Government decisions on export controls, industrial subsidies, and allied procurements are increasingly being framed as security economic choices. For instance, EU sanctions and import bans on Russia have slashed down EU-Russia goods trade by 82% from early 2022 to 2025. The second theme for me is supply chain transformation. So historically, supply chains relied on predictable supply and demand. Volatility has become the new norm, which is why we've seen how new strategies have come up: reshoring, friendshoring, nearshoring. Many businesses are shifting from just-in-time sort of inventory stock, which focused on minimizing stock and maximizing cost efficiency, to a just-in-case approach that emphasizes resilience. And they've done that by diversifying the suppliers or bringing them closer to home. So resilience is being preferred over cost advantages or just pure efficiency. Third, technology and strategic competition between countries for dominance in technology-focused industries. Governments are engaging in an unprecedented subsidy race to secure domestic control over production, and semiconductors, basically chips and electric vehicles, are at the forefront of this tactical competition. The fourth one for me would be the energy transition is rapidly becoming one of the most significant disruptors of traditional trade flows, manifesting through explicit trade-linked environmental policies. Policies like EU's Carbon Border Adjustment Mechanism, CBAM, are reshaping markets, creating incentives for greener supply chains. And the outlook for 2026 is increased global compliance friction as trade partners argue over the fairness and non-discriminatory nature of these green measures. Lastly, I think it's also about the status of multilateralism, the growing preference for regional trade agreements over global rules. The WTO will remain a crucial forum for transparency and negotiating targeted technical deals, but it will not really reclaim its role as a central enforcement body without a major consensus-driven solution for its appellate body crisis. The 14th WTO Ministerial Conference in March 2026 will be key to gauging multilateral trading activity.
Ross, as you can see, there's a lot of signal going on here. Now, these changes that Aastha and Scott are talking about, this is stuff that is already underway. You watch the global macroeconomy. Are we seeing the effects of this yet? Will we see significant economic effects of this in the macroeconomy in 2026?
Yes, I think this reorientation is certainly underway. But if you're gauging this from a very high level, looking at, say, global GDP or even trade volumes, it's still quite a slow process. There are revolutionary aspects to this, but if you look at the GDP data, it's playing out in a fairly gradual way. So for global GDP growth, for example, we think 2026 will bring a sort of very similar outturn to what we saw this year. So global growth a little above 3%, which through the lens of the advanced economies might sound quite impressive, but actually it's a significant structural slowdown versus previous cycles. You're obviously seeing big shifts in trading patterns, particularly the way China has reorientated trade away from US markets. And aspects of that have occurred maybe more speedily than you might have expected. But I think maybe the clearest illustration of this new world is when you look at overall trade volumes growth those are expected to slow probably by over a percentage point in 2026 versus 2025. So in other words, I think we're still, in many respects, at the foothills of this reorientation, but we're beginning to see clearer signs emerge, albeit gradually. And one other thing I think will be crucial in 2026 will be the impact of US tariffs on US inflation. We're only just beginning to see the inflation data in the States capture that effect. Prices adjust more quickly than volumes, typically, in economics. We've not quite seen that inflation hit, but it feels like it's coming, and alongside market expectations for still quite aggressive interest rate cuts from the US Federal Reserve. I mean, this is an extraordinary economic policy experiment, let's say, that's facing us in the year ahead.
Yes, extraordinary is right.
Trying to be diplomatic. Yes.
Yes. We have had many conversations over the last year. We've seen some news. We're expecting something to happen straight away. And then it doesn't happen. And then a lot of commentators come back and say, well, it really had no effect, and then produce some explanation for why it had no effect. We are going to see those effects next year.
I think they'll be more evident. I think it was Ronald Reagan who said an economist is someone who can tell you tomorrow why what they predicted yesterday didn't materialize today. And I think that's about right. But I think one of the features of the economy is its flexibility and adaptability. So on the trade point, ahead of Liberation Day, this was obviously something that was quite well flagged, though the detail wasn't known. But we saw a lot of front loading in terms of trade flows, inventory rebuilding. And that delayed, it seems, the inflationary hit in the US. And when you get into the weeds of the sort of US data at the moment, it looks like those price pressures are there, but they're still in the supply chain. It's more in the sort of importer balance sheet as opposed to the end consumer. But those import costs, those tariff costs will surely make their way to consumers. So there is going to be a meaningful inflationary hit in the US. And really the question is this more of a one-off shock that just unwinds? Or does this become more embedded, and does it infect the price and wage setting mechanism? And again, that then brings us to the question, should the US Federal Reserve really be cutting interest rates as aggressively as markets are pricing? And I think macroeconomically, that is probably the single biggest question for the global economy in 2026.
Well, if we're talking about single biggest questions, we could mark 2025's probably most important date for the sorts of things we talk about as Liberation Day.
My fellow Americans, this is Liberation Day. Waiting for a long time. April 2nd, 2025.
Looking ahead for 2026, if there's one event or one indicator to look out for that really shows how things are reorienting, what are you going to pick? And I'm only going to give you one, Aastha. Don't give me a list of 5. Scott.
Tim, I'm going to look at India. In particular, I'm going to look at India's defence trade, and I'm going to look at its oil, whether we see any shifts in the pattern. And I pick India because I think it's a great example from a geopolitical lens. India, multi-aligned, wants to have relations across the board, not be polarised. It's seeking growth for the biggest population on the planet, and it's facing real security problems. In a minor war this year. So I think India is a great example. And I think the thing to look out for here is, do we see India's purchase of Russian weapons, for example, which was around the 50%, 60% mark? Do we see it changing? Do we see it dropping? Do we see it pivoting back again? It has dropped recently down to 36%, but will that shift? And then Russian oil. It's in the news because we've seen Donald Trump put another 25% of tariffs against India. Will that shift the pattern of hydrocarbon purchasing by India on Russia? It was down at 2% from Russia in about 4 years ago. It's now 40%. Now, there have been signs recently, as US-India trade negotiations go on, of a slight dip. But where will that be in 2026? I think it will give us a sense as to where a really important country like India is reorientating its trade.
Very interesting. Aastha, what are you going to pick?
I think I keep an eye on where trade growth is actually coming from. If at the macro level, we see regional or South-South trade, say, for example, between Asia, Africa, or Latin America and Middle East flows, if they start growing faster than traditional East-West flows, then I would think that there are clear signs of reorientation being real. At the micro level, I think I'd watch who's expanding globally. If we see mid-sized Southeast Asian firms or African firms showing up in regional supply chains or new export markets, then I think that would be some proof. But at the same time, I think we would not get any fireworks or one dramatic event. But if these trends start to show up quietly in data or headlines, then I would say that the trade compass has started to shift.
Ross, what would you pick?
Well, if I can be a bit more parochial with my UK economist hat on, I appreciate this is a sort of global trade geopolitical podcast. I think the thing I'm watching is essentially gauges of import price inflation. In the UK, obviously, we have inflation still running some way above target. The main challenge is about domestically generated inflation, services inflation, wage inflation. But it would also be helpful in getting inflation back to target sustainably if some of these external influences, price forces, were diminishing. And the big debate really around the trade disruption boils down to you've got the disinflationary supply glut story as the US pulls up the drawbridge, goods get diverted into other economies and supply outweighing demand puts downward pressure on prices. But then against that, you've got the supply chain disruption, the reorientation of trade flows and so on, and nearshoring, reshoring that Aastha's talked about. These things are inherently inflationary, and how the balance of those two forces plays out. The disinflationary side should dominate, and that underpins our expectations in part for UK inflation to be getting back to target, perhaps by the end of 2026. But if we get some continuation of upside price pressures from those external influences, food, manufactured consumer goods, and so on, it will make life more difficult for the Bank of England, and ultimately borrowing costs in the UK for households and businesses will be higher than they otherwise would. So I think that import price channel is an important thing to keep an eye on.
A few years ago, we never talked about inflation at all. And now we cannot talk about things without mentioning inflation. Thank you very much, all of you. So we have covered many, many topics during this year. And if you haven't listened to all of our episodes, go back and do listen to them, because many of the things we talked about, well, they are just as relevant, maybe more relevant now than they were when we first talked about them. But, Aastha, you mentioned one that is going to be very consequential for trade in 2026. What?
I think it would be technology. This intensifying tactical competition between countries for dominance in technology-based industries. We've seen how electric vehicles and chips were at the forefront of this tactical competition, with the US and Europe spending hundreds of billions of dollars to build domestic fabrication plants. And in 2026, this is expected to continue via massive capital expenditures and trade barriers on equipment and chip transfers, creating competing tech standards and also ecosystems. And the electric vehicle market, on one side, China, with its cost-competitive manufacturing base, and on the other side, Western protectionism. Chinese firms have leveraged scale and supply chain mastery to dominate global battery and vehicle production, which has pushed EU and the US to consider or implement higher tariffs or strict subsidy requirements like the Inflation Reduction Act to protect their nascent domestic industries. And the direction for 2026 is for this tension to likely result in a highly regionalized electric vehicles market. And I think one interesting thing that we've seen in 2025 particularly is the scramble for rare earths and energy minerals has led them to rapidly emerge as the possible new oil in geopolitics or international relations.
We banned you from saying new oil.
China remains a dominant player, but the US-China trade truce and the new initiatives in Australia, India, and Africa are beginning to diversify these critical supply chains as countries invest to build de-risked supply chains outside of China's control.
There is one other thing that you mentioned, which sounds to me like one of these things that we don't really know what it is now, but by the end of the year, maybe we will all, certainly in Europe, know what it is, and that is CBAM, C-B-A-M. What does that stand for? What does it mean?
So I think people often overlook regulation when thinking about trade. But in 2026, EU's Carbon Border Adjustment Mechanism, or CBAM or CBAM, could be a real game changer. Currently, it is in a transitional phase, and it is set to impose financial obligations from 2026. CBAM puts a price on the carbon component, which is embedded in imports. So, if, for example, if steel mill outside of the EU produces steel with higher emission than the EU standard, then the steel, when exported to EU, would face a carbon cost at the border. It's basically EU's way of saying that if you wish to sell here, you have to meet our own climate rules. And this matters because companies and countries that can produce cleaner steel, cement, or aluminium, they suddenly gain a competitive advantage. CBAM isn't just another regulation. It's a structural factor shaping trade.
Ross, everyone's going bananas about technology at the moment, the way they talk about it, especially AI and how important that's going to be for productivity and then the global economy in 2026. Are you going bananas as well?
Maybe it's an age thing. I'm able to restrain my enthusiasm on this, I think. But, in some ways, for all that AI, I think at some point will be truly transformative and revolutionary, this isn't entirely new. I mean, there's a very famous quote from a US economist, Robert Solow, in the late 1980s, where he famously said, "You can see computers everywhere, but in the productivity statistics." Mm-hmm. So that was nearly 40 years ago. And of course, we went through, I remember, in the earlier phases of my career, the sort of the 1990s dot-com boom and the internet revolution. So, we can see in places, you can see in asset market, equity market valuations, the impact of AI. And practical things day to day, we can see the adoption of AI technology, but we still don't really see it in the productivity statistics and in the GDP data. Mm-hmm. From a GDP perspective, this still feels a little bit more evolutionary than revolutionary. And it raises questions as well about whether we're sort of fully capturing, measuring these productivity gains. And, we know a lot of statistical agencies face a lot of challenges. As economies become more complicated, it's harder to measure output. But as I say, we have a sense of where we are in terms of economic output and growth, and we've got a sense of where we could be in 5 or 10 years' time. The path between the two will not be linear or necessarily very predictable. And is 2026 going to be the year where AI becomes, transformative in terms of economic growth? Probably not. But there is a sense of where that destination is, and therefore at some point you could see something quite radical in terms of not only the economic growth data, but of course the disruptive effects in labour markets and in terms of employment. And so the policy challenges here could be both enormous and also, I wouldn't say unprecedented. It's a long time, for example, since we've had real labour market dislocation in advanced economies. You need to go back to the structural reforms really in the 1980s.
Yes.
History never repeats itself, but it rhymes. I think maybe some of those more disruptive macroeconomic episodes, going back to the 70s and the 80s, in a way might provide some sort of guide to how policymakers deal with the disruptive effects of this new technology as well as its obvious benefits.
You mentioned dot-com boom. Dot-com boom came with dot-com bust. Are you worried about a technology bust in 2026?
Valuations are extraordinary and hard to justify, arguably, on many conventional metrics. I think the problem with when does the bubble burst or when does the bubble deflate? I mean, timing these things is notoriously difficult. But I think the principal obstacle to expecting some real dislocation in 2026 is that money is still relatively cheap, and American money could become significantly cheaper. Another 75 basis points of maybe 100 basis points of US Fed rate cuts alongside still very stimulative US fiscal policy. To the extent that the bubble requires monetary and fiscal inflation, if you like, support, that doesn't feel like that disappears in 2026.
Scott, you were talking about a geopolitical reckoning. Is technology going to be a spark? Is it going to figure in that?
It's going to figure, Tim, but I don't see it as a spark. It's more putting fuel on the flames or the burning ember. I think 2026, my suggested reckonings, I think will be made more difficult to interpret because of misinformation, because of the use of information technology. So in that sense, technology will heighten the debate, will confuse the debate, and could make the reckonings harder to interpret. Technology is a spark in other aspects of geopolitics next year, whether it be the rearming or the reorientation. I think the race to dominate future technologies is very much a spark in other aspects of geopolitics. But when it comes to the reckoning, it's really about how we interpret, how people get their information, really.
one bit of the show always stays the same, and I want to know what's on your agenda. But this time, what's on your agenda for 2026? Something that maybe the rest of us aren't thinking about yet. Aastha, you go first.
So one thing that I'd be watching closely in 2026 is how India's new trade and climate-linked export incentives could quietly reshape certain sectors. India has been rolling out policies to reward exporters that meet strict environmental and labor standards, particularly in textiles, chemicals, and steel. On the surface, these policies might just sound like small policy tweaks, but I think it could have implications for global buyers and supply chains in 2026.
Scott?
Tim, whenever I get the question about what's on my radar and I look at the state of geopolitics, I'm just reminded of the famous quote from Jaws. I'm going to need a bigger radar. That's what it feels like. I'm going to pick two. I'm going to pick one down at ground level, another one up in the stars. The one at ground level, I'm intrigued by the Gen Z momentum. We've seen it in Nepal, we've seen it in Kenya, we've seen it in Madagascar, we've seen it in Morocco, and some people I hear are viewing the Mandami victory in New York as a moment of youth. So there's a youth momentum. I'm intrigued as to how this plays out in 2026 in geopolitics. So the view of the world as seen from the 20-somethings, cost of living, employment chances, the impact of technology, etc., and what that does to their agency in geopolitics. But the second one, here I'm going to stick my neck out and say, I think 2026, I think the thing that I'll be looking for on my radar, pointing upwards, will be the weaponization of space. I think we will see space become much more of a geopolitical domain. A lot of investment going into technology in terms of disrupting space capabilities, and there's a far greater awareness about our dependency on space-based technologies for our transactions, for our navigations, for our communications, and of course for hard power. So for me, I'm looking at space as the outlier for geopolitics in 26.
That's astropolitics, I suppose you could call it. And finally, Ross.
Well, I mean, I can't compete with Scott's Star Wars
No one can.
narrative. Again, back sort of closer to home in the UK, we're approaching what could be a defining budget and the possibility not only of large tax rises, we've had plenty of those, but for the first time in a generation, meaningful tax rises potentially hitting medium and sub-middle income voters. You know, the UK tax burden is at its highest level since the aftermath of World War II. The state has got relentlessly larger and more expensive. But in the last 2 decades, for a median income household, the tax burden hasn't changed a great deal. And it feels like we are at the limits, essentially, of what is affordable under current tax structures. And the point is, from a sort of, say, left-leaning political perspective, if you want a bigger Scandinavian-style state, you probably need Scandinavian-style tax base where more voters pay a bit more. You can't just get any more revenue, really, from the top 1 or even 10%. And I wonder, therefore, if we're reaching a point where this relentless rise in the size of the UK state and potentially elsewhere, if we will begin to run into more popular resistance on that. I don't know what the answer to that is, but it will be interesting, certainly, to see what the reaction to that is, because that will be, from a personal taxation perspective, quite a dramatic departure.
Ross, thank you very much. I particularly enjoyed when you said left-leaning, you leant to the left. Ross, thank you very much for joining us today. Will you come back again to Trade Links?
Well, if you invite me.
It's a standing invite. You can come anytime you want. Thanks for everything that you've done this year, Aastha, on all the analysis you brought to it. Really appreciate it.
Thank you so much, Tim.
And thank you also to Scott for scaring us every single episode.
It's a pleasure.
Thanks to all of you for listening and following us. If there is something you want us to discuss, then please do get in touch. Let us know. If you could also leave us a review when you do that, that would be great as well, especially a 5-star one. We'll see you soon.